I mean, at UBS, we forecast the euro at 113 for the end of this year, 117 for the end of next year. So we expect that the euro will continue to appreciate. In the short term, though, we think the appreciation trend has run its course. When the ECB comes together today to make a decision, though, I think they'll take 3 steps back and look at the more fundamental question, where short-term euro volatility doesn't matter so much. So this is much more about the big picture.
But it's interesting that in March we saw inflation expectations lifted by the central bank, but now many analysts are saying we're going to get inflation expectations downgraded. Now I can't understand why they would walk it back if it weren't for the fact that they feel that the stronger euro is going to remove some of that inflationary pressure.
Yeah. So first of all, I mean, we've seen a pickup in inflation in the spring that has to do with calendar effects around Easter, which is why the March, April numbers have seen quite a bit of volatility. When the ECB comes together today, we think indeed that they will downgrade the inflation forecast a bit. That has to do with a stronger euro and also with somewhat lower oil prices. But these are things that can change quickly. So again, I think for the more fundamental monetary policy decision that will have to be taken over the next couple of months, the big picture rather than the short-term volatility will be crucial.
Given that the ECB's primary mandate is price stability, and to all intents and purposes, we are still some way away from achieving the inflation target, does Mario Draghi then continue to make the case, in spite of German opposition, that we need to delay tapering and normalization?
I think so, yes. I mean, I think that Mario Draghi and his key allies on the more dovish side will make the case that ongoing monetary policy accommodation is required. However, I think that the hawks on the other side will now be pushing very, very hard. And they have good reasons to do so because economic activity has been strong, the sentiment data have been very strong, the political risk is reduced. Also, we know that over the course of next year, the QE program will run into more and more technical challenges, which would require very difficult political decisions to be made on the governing council.
Just explain that. What technical
Well, we know
challenges?
that already by now, the ECB is buying a lot less Finnish, Irish, and Portuguese debt in its QE program. This is because there's not enough paper outstanding. And over the course of next year, these availability issues will only get worse. And that means now that the sun is shining, so to speak, in Europe, it does make sense to use the opportunity to wind down the QE program over the medium term.